afternoon. Welcome to Halftime Report. I'm Sonia Shenoy and with me is Ekta Batra and Mangalam Malu. Things are looking pretty good for the market, you'd have to say. Up about 0.5% for the Sensex and the Nifty. The Bank Nifty is doing well, 0.5%. Yes, it's petered off a little bit from the highs, but there are lots of big things to watch out for. There's the Jackson Hole Symposium. On Monday, there's the Reliance AGM. So local and global cues galore, I'd have to say. But give and take everything, the market is holding up quite well, you'd have to say.
Hi, Sonia, Mangalam. Yes, absolutely. Hi. And, you know, we do have the GDP data for back home for Q1 FY23 next week as well. So that is something that the markets will be looking at as well. And yes, there is a base impact which is really going to benefit us. But nonetheless, what growth is looking like in an inflationary environment is something that the street will watch out for. Currently, Bank Nifty financials doing well.
All right, things looking good. So let's go across to the first corporate that we have lined up for you today. Cosmo First, that's the stock on our radar. The company's first quarter margins were under pressure due to production lines that were added by them. But importantly, let's see what the company has in terms of plans going forward. They do have strong plans for a larger part of their revenue coming in from specialty. But importantly, they're also looking to build and demerge their pet care business vertical. At what point do they do that? And for everything else for this year itself, we do have Pankaj Poddar joining us. Thanks a lot, Pankaj, for joining in. Pleasure as always speaking with you. But, if you could tell us a little about the way business has been in the second quarter so far. First quarter, everyone was talking about raw material prices being high. There had been an element of pent-up demand, etc., with an expectation of stronger demand in the second half of this year. Have you seen any of your clients go ahead and increase their orders, anticipating strong demand in the second half of this year?
Yeah, hi. The second quarter is normally good because of Diwali demand locally. But given that we are a very large presence globally, and for us, Indian market is less than 50%. So we see a lot of good demand coming from all over. We see challenges in Europe. Multiple factories are having challenges there because of power cost. So we are getting good demand from Europe, from Americas, and even Indian demand is quite robust right now.
But this power and energy costs that might hit, your industry from Europe, is it something to worry about? Or, I mean, how are you wading through that? Because costs are escalating across the board, right?
Yeah, so it's more helpful to us. Because typically what we are able to understand there is that government is trying to support the larger companies out there, and therefore some of the petrochemical companies are running, but some of the film companies have their own set of challenge. And therefore a lot of food packaging companies are actually importing films from largely India, and therefore the demand has gone up for Indian films out there, and so are the prices. So overall, we see a decent outlook in terms of the demand.
Okay. Speaking about this strong demand that you're seeing geographically, you didn't put any numbers in terms of which geographies would you probably see most growth, and as how much would you probably see? Can you give us some numbers, maybe even a percentage figure in terms of what you're anticipating for FY23, the biggest growth drivers geographically, and how much?
Yes, so see, demand is growing because of multiple factors. One itself is packaged food and other things which where the film is used. Overall, it's growing. The second thing is BOPP is a much better recyclable material, and therefore the BOPP is being preferred over some of its other products, similar kind of products.
Sure, Pankaj.
Those are
the demand drivers. Yeah, we want the numbers.
So in terms of numbers, the BOPP India by far is the best region where we feel that demand is growing anywhere between 11-12% to 15%. Obviously, there's timing factor for month to month. And global demand also, which used to be 4.5%, is clearly growing at 5.5 to 6%.
All right. And, the second half of this year, you do have the adhesives business coming on stream as well. How is the CapEx panning out there? Is it on time? And what is the initial revenue expected to be from that business?
So it's a very complementary business to our films because the segments where we are present, we are coming in adhesives in the similar segment. The capex is already done for that, and it's just a matter of time. Hopefully, from October onwards, we'll start the adhesive business. And obviously, it takes initially some time because you need to take the customer approvals, and at times it's a 3 to 4 month process. This year, we do feel that the initial process will start and we will get some revenues this year, but it should scale up very significantly next year. So this year projection is close to, I would say, just 15-20 crores because there'll be a lot of time in terms of approvals. But next year, we should clearly looking at least 3 to 4 times growth in terms of our revenue numbers. And a year thereafter, again, there should be a very significant growth when it comes to adhesive sales.
Oh, 3 to 4 times growth. So I didn't understand that. You're sitting on a base of around 3,000 crores as far as FY22 revenues are concerned. By end of FY23 and then FY24, what kind of numbers are you looking at?
No, sorry, I'm just talking about adhesive numbers.
Okay.
As far as the overall company or a group is concerned, we are talking about 10% growth this year and another 10% growth next year. And a year thereafter, we should see a bit more growth. We had given earlier projections that our revenue should easily grow by 50 to 60% by FY26 from the current levels. But the question was very specific to adhesives, and adhesives this year we should do 10 to 15 crores this year being the start of the year, and the adhesive business should become 3 to 4 times next year.
Okay. Mr. Podar, I'm also interested in knowing more about your pet care segment, because that seems to be a segment which is seeing a lot of traction across companies. Companies are looking to invest within that space. Tell us about how much have you generated in terms of revenues, how much are you projecting in FY23, and is it significant enough for you to probably demerge it and look at maybe investors coming through a possible listing in the future?
So, see, we would ideally like to scale it up to larger numbers before we demerge it. We had earlier projected FY25, and we are pretty much looking to do it in FY25. As far as the monthly numbers are concerned, we did around 60 lakh sales monthly last month, and we're growing month over month at 23%. We have already, launched our website. The Android version of the app is also launched for some products and some services. The iOS version should be launched in next quarter as such. And we are going to become the entire ecosystem when it comes to product and services. And we are looking forward to open at least 15 stores by the end of this year. And next year, again, we would like to scale it up. We would like to open more stores than this year. And hopefully by the end of FY24, we should be easily having 35 to 40 stores.
All right, take that point. Ziggly is doing extremely well. Final question from my end. Then, you target 80% of your revenue coming in from specialty films, etc., which is margin accretive. But I wanted to understand, how do you plan to sustain this? Because, I mean, specialty for certain period is specialty, thereafter it becomes a commodity. So how does it stay margin accretive for a longer period of time? Can you give us a sense of that?
So we do a quarterly review in the company. We have categorized our films into 3 categories: specialty, semi-specialty, and commodity. Wherever we find that there are, let's say, more suppliers coming up, and the margins are coming below a certain threshold, then we shift that to semi-specialty or a commodity. So it's a quarterly review. It's not something we have a big chunk of different kind of specialty films.
Yeah.
And what we are clearly seeing is that 65% of our revenue, where there is no impact to the market, where the market goes up or down, our margins remain stable because they're all raw material linked contracts, while the 35% is still linked to the dynamics of the market, where if the prices goes up and down based on demand
and
supply.
what are those thresholds? What are those thresholds for defining commodity, semi-specialty and specialty?
It's a bit internal, but in general, we see anything above 50 per kg goes to specialty, and anything little below that goes to a semi-specialty, and the rest goes into commodity films.
Okay, all right, we leave it at that. Thanks a lot for joining us, and all the best for the quarters to come. That's Cosmo first. Let's move on. Here's a CNBC-TV18 exclusive. Sources tell us that the insurance regulator is considering amending the investment regulations for private equity players. Yash, my colleague, is here to give us the latest on that. Yash, over to you.
Well, quite recently, the insurance regulator IRDAI has made a series of regulatory amendments to make it easier for insurance companies to operate. And now what we are told by our sources is that the insurance regulator is looking at attracting more and more investments into the Indian insurance sector, and specifically foreign investments. What we've been told by our sources is that the insurance regulator has reached out to various large global private equity players, asking them for suggestions in terms of the regulatory changes which are required, which will help them invest in the Indian insurance sector. Specifically, there are two important things which, as per our sources, IRDAI is looking at. First one is essentially relaxing or removing the condition that private equity players can only invest through a special purpose vehicle or SPV. Now, what we've been given to understand is that this rule of only being able to invest through SPV could be removed and essentially it will apply on only certain private equity players. Many private equity players could be exempted from this rule, after which they'll be able to invest directly into Indian insurance companies. How will it be decided? Essentially three important things. One is the track record of the private equity player, one is the size of that private equity player, and the third one is how fit and proper that private equity player is. Based on these certain parameters, exemptions could be given to private equity players to invest directly in the Indian insurance sector. Second thing, as far as the lock-in period is concerned, more than 10% of investments coming through private equity players have a lock-in of 5 years. This rule could be relaxed further. The lock-in period could be reduced. That's the consideration which the insurance regulator is also moving ahead with.
Okay, all right, Yash, thanks very much for that. Well, on that note, we need to take a short break. But on the other side, we have an interesting chat lined up with Aniket Mhatre of HDFC Securities to discuss the top loser on the Nifty, Eicher Motors. Stay tuned.
Welcome back. 100 points on the Nifty as we speak, 250 points on the mid-cap index as well. So let's talk about a special segment then, Value Plus. Sonia joins in, of course, tracking the auto. Sonia, yesterday you spoke about one of the auto ancillary companies, Asahi. You have a lot more today.
You know, it's an ongoing theme this week where all the auto ancillary stocks, most of them rather, are hitting fresh 52-week highs. So I thought I'll just put all of it together. If you look at the companies, you spoke about Asahi India. As we know, this is a glass and window manufacturer. It's been getting high demand from OEMs, and that stock is at a fresh 52-week high. You have Precol, which is a technological solutions company. That is at a fresh 52-week high. Rajratan Wires, which is a leading tire bead manufacturer. Bead wire manufacturer, sorry, they have 45% market share, doing very well. Lumax Autotech manufactures gear shifters, emission systems, fresh 52-week high there. Mahindra CIE, as we know, is a multi-technology auto component supplier. And then you have Shanti Gears that we recently spoke about, a gear manufacturer. All these stocks at fresh highs. Now, there's also so much demand that there is fresh capacity being put on board by many of the companies. So Uno Minda told us earlier in the day that they are investing up to 300 crores to expand their four-wheeler alloy capacity. And then you have something like Rajratan Wires that will be investing 370 crores. And there's a new plant in Chennai that's coming on stream as well. Also, most of these companies have been doing very well in terms of earnings. So Shanti Gears, for example, they had a revenue growth of almost 50-odd%. The order book went up 25% in just one quarter. Asahi India had a revenue growth of 53%, and they have now market share of 74% in the passenger vehicle, glass market. And finally, Lumax Autotech, revenue growth of 62% and EBITDA up 160%. So this is a space that has been doing exceptionally well. In fact, we spoke with Sunil Bohra, who is the Group Chief Financial Officer at Uno Minda, about their plans to expand and put fresh capex on board. Listen into what he had to say.
This is actually the third expansion in last 12 to 18 months, which we are going ahead with. Because the application ratio of the alloy wheels to steel wheel has continuously been increasing. And we believe that still there is a huge potential for further growth. So there is definitely going to be a significant demand potential even in future, where the application ratio improves. Even from customer perspective, people are preferring alloy wheel cars, or maybe people are trying to get the alloy wheels retrofitted when they buy the car from the showroom or in the aftermarket. And with this, our alloy wheel capacity for four-wheeler will be something around 3.5 million wheels per year. At the beginning of the year, we did give a guidance for the full year EBITDA margin range of 11 to 12%. So with 10.4 in Q1, definitely we need to better on that so that we get average of 11 to 12, and we are committed still on to maintain that EBITDA margin guidance for the full year.
Okay, Aniket Mhatre, who is the research analyst at HDFC Securities, joins us now. Aniket, good afternoon. We, of course, called you because of the resignation that took place at Eicher Motors. But I want to ask you also about the auto ancillaries that have been surging. Despite the rise that we've seen, do you see fresh upsides in any of these names that I mentioned? And if yes, why?
Hi, good afternoon, Sonia. Thank you guys for having me on this show. So quickly on the auto answer is at the moment have three stocks under coverage since we are ramping up our coverage. And one of the names that we certainly like in this is Bharat Forge. If you see, Bharat Forge has been underperforming because of issues around the outlook for US Class 8. But our argument has been always that, all its other business segments continue to do extremely well, be it domestic series, be it non-auto, both domestic and exports, or even be it their overseas subsidiaries. Each of their categories, apart from US Class 8, are doing reasonably well. And even if you assume a slowdown in US Class 8, I think its other categories will help offset the slowdown in US Class 8. Add to that, you have the currency which is in its favor since they are major exporters. INR depreciation certainly benefits Bharat Forge, which is what we also saw in the Q1 numbers. Q1 numbers were actually ahead of even our expectations for the simple reason that all other segments have done exceedingly well, and even currency has turned favorable. So we continue to like Bharat Forge, which actually hasn't done much in the recent rally that we have seen in the auto names.
Okay, so Bharat Forge is a stock that you like, but I know these companies are not in your coverage, but still wanted to ask you, I mean, so many of them are doing exceptionally well. Precall, Rajratan Wires, Asahi India has been a great company for a very long time. Any of these themes that you'd pick up for the long-term investor?
Right. So, from a long-term investment perspective, to be honest, we are looking at a theme that's playing out, which is China Plus One, which is helping Indian auto component players gauge a lot more orders from global OEMs. A lot of players a lot of players who have facilities in India and exports abroad are seeing increased traction going forward. So that is one of the themes. The other theme is, of course, around the EV transition story, right? Where both India and supplies to Europe and along with the light range story that is evolving, a lot of global OEMs also want to sort of take source from India. So these are some of the themes that certainly will play out. And as we ramp up coverage, you will see some of these names, that we will try going forward.
Okay. Just wanted to ask you now about Eicher Motors, these exits which have taken place on the management front, the top exits, around 4 to 5 just in the span of 1 year. How would you read it? Do you think it shakes your confidence in the company?
Not really. To be honest, we have seen senior level exits in Eicher in the past as well. So that would not be a cause of concern at the moment for us. What is certainly need to focus on is on the business front, and I think they are doing reasonably well around the business front. If you look at the recent launch of the Hunter 350, I think it is seeing a very strong response. If you look at the order backlog, we check with some of our dealers fraternity, and we understand that the order intake for Hunter 350 is extremely encouraging, and it can be the next growth driver that Eicher was looking at. They have talked about their rebalance strategy in their recent analyst meet, wherein they want to sort of refocus on profitable growth, and I think the Hunter 350 would allow them to do as much. Plus, on top of that, they have other product launches lined up as well, which is extremely encouraging. So from a business perspective, I think they continue to do reasonably well in my view.
Your thoughts on Bajaj Auto as well as Hero MotoCorp?
Sorry, I missed your question.
Your thoughts, Aniket, on Bajaj Auto and Hero MotoCorp?
Yeah, so on Bajaj Auto, we are not as positive for the simple reason that exports seem to be facing headwinds, be it in Africa, where we are seeing some sort of a ban, likelihood of a ban coming up in places like Nigeria, which is clearly concerning, given that Africa is one of the largest markets for Bajaj, and to that extent, exports is one of the largest growth drivers for Bajaj. That is one concern area. The other concern area we are looking at is three-wheelers are transitioning to EVs very fast, and three-wheelers is a very high margin category for Bajaj Auto. So those are the two clear concern areas that we see for Bajaj, and current valuations leave a very limited room for upside. On Hero MotoCorp, we continue to like the name. One is clearly valuations are extremely supportive right now, and we believe once rural demand picks up, I think Hero will be the biggest beneficiary of a rural revival. Add to that, if you have seen the recent traction, the Hero has actually recovered back lost market share that from last year. So in that sense, I think Hero seems to be very well placed to continue to deliver good returns for investors.
Okay, finally then Aniket, on M&M, there's a lot of talk that next month M&M will be unveiling its electric vehicle, the XUV 400, and it's going to give a tough fight to the Tata Nexon. So there's a lot of excitement around it. The stock is at a fresh 52-week high. Do you see more upsides here?
Yes, certainly. So M&M is one stock within the OEMs that we continue to like. If you see, even leaving aside EVs, right, the current recent EV launches, be it the XUV700 or even the Scorpio, they have seen a phenomenal blockbuster response. 1 lakh order bookings for a Scorpio have been unheard of in the past and unheard of in M&M, right? So it is a question of now how soon they are able to ramp up production capacities to satisfy these bookings, and they are expected to see a very strong market share recovery in the coming quarters. So M&M we continue to like, and even the EV strategy that they have recently unveiled. They've unveiled the Born Electric platform with 5 new launches over the next 3 to 4 years, which continues to highlight that they are clearly on the right track as far as their business momentum goes. So M&M is clearly one stock within OEMs that we continue to be positive on.
Okay, all right, Aniket, we're going to leave it on that note. It's been an enriching conversation that we've had with you. Thanks very much for joining in and talking about a whole host of stocks from the auto as well as the auto ancillary space. Just before we take a short break, I just wanted to pull up Lupin because there's important news. Remember that the stock has been under pressure because they've received a complete response letter, which is a set of queries for Spiriva generic, the inhalation product from the US markets. But the news today is that they've received approval for the generic version of Spiriva in UK. So the UK MHRA, which is the UK regulator, has given the go-ahead for this particular drug. If in case it is an eventual positive read-through for the US, and that, maybe it would probably see a happier outcome, a sooner outcome in terms of approval for the US because the UK has given its go-ahead, then that would be a positive reading. So nonetheless, important news and positive news coming in for Lupin, considering that the stock has been down and out for the past couple of trading sessions. This should probably help lift sentiment a little bit. Time for a break now. Prakash Gamba will join in next to discuss the technicals. Welcome back. Well, holding up well ahead of the Jackson Hole Symposium for our markets. So the mid-cap index up around 240 odd points. Just watch out for a couple of stocks such as RBL Bank, which has seen a very strong run, and now it's come under the hammer in terms of some amount of profit taking. So that stock down around 5.5 to 6 odd %. And even a couple of the other stocks, say something like an Adani Power is down around 4 odd % at this point in time. Prakash Gaba joins in to discuss the technicals on the show with us this afternoon. Prakash, hi, welcome to the show. If you could start by giving us a sense in terms of what you're tracking on stocks as well as the index.
Well, good afternoon to you. I would like to say that the market has opened with a gap and traded within the day of yesterday. This is classically Nifty and Bank Nifty, a classical inside day, which basically means a trendless day. So it needs to come out of this range for a trend to emerge. So far, the market is stretched on the upside and so far looks okay, but still needs to confirm it by going above 17,600 or 700 and below 17,600 for a trend to emerge. Looks like that is very unlikely unless it happens in the last hour or so. And if that happens, the chances are going down a bit more than going up. So Nifty and Bank Nifty is trendless. We need to be stock specific.
So when you're looking at individual stocks, what do you pick up? Prakash, there's a lot. I mean, even if you look at, fresh highs. Names like Coal India, M&M, all sitting at fresh highs. Anything that you like?
Yes, certainly. I like two stocks here. One is Bharat Electricals. Bharat Electricals is looking good, trading at 306 zones. Looks like it's trading at new zones here. Possible the next technical target at 310 and maybe 315 in the days to come. But just needs to have a stop below 300 and trade long. If you get dips, do you buy it? Yes, buy it off, have a stop below 300, and possibly we'll see an up move for the next couple of days. So Bharat PEL looks good to me. The second stock is from the metal pack is National Aluminium. I think National Aluminium certainly is looking good to me. Very good chance. Weekend it's trading at 81.55. Very good chance it can climb to around 84 zones. Structurally, an up move is started. Some kind of a sideways zone with a bullish bias. Have a stop somewhere below the levels of 80 and trade long National Aluminium.
All right, Prakash, thanks a lot for that. Earlier today, we also spoke with Rahul Arora of Nirmal Bang, the CEO of Nirmal Bang Equities, and he says that the Nifty does have some strong support around that 16,500 to 17,000 mark itself. And he's also given his sectoral outlook. Listen in.
I don't see any trigger for the market in a very material way to break out above 18.5, 19,000 on the way up. Conversely, 3 months back when crude was at 125, 130, and there were predictions of 150 and thereon, crude sort of bounced back to 90 to 100. So I think that will provide some downside support, both on the twin deficit as well as the currency. So I think you're probably going to get into a situation now where the range of the market has shifted, and probably for the second half of this calendar year or whatever is left of it, you're probably going to be in a range of maybe 16.5, 17 on the way down to about 18.5, 19 on the way up. The fear of the Chinese economy slowing down and what resultant impact it could have on metal prices globally. But then, of course, China, surprising with rate cuts off late, has actually sort of changed that view a little bit, that they're looking to spur the economy in whatever way they can. Now, China traditionally has always been a country where they've gone in for excess capacity, more than what they require on any infrastructure project. So I think it's had a dream run. It's had a bit of a time and price correction, but it's not a bad time to look at it, because I think India will also end up being a net consumer in a very material way. I think we're sitting about 20 months away from a general election in India. I do anticipate that government spending will pick up in a fairly material way through infrastructure projects, which will definitely increase the demand for commodity and commodity-related products. Yeah, I would look at being with the market leaders in both ferrous and non-ferrous, because they've had a bit of a time and a price correction. We still retain our positive stance on names like Ashok Leyland, Hero, TVS, and the likes. But on the auto ang side, I agree with you. I think for a lot of these players, the replacement cycle will be kicking in. I think we're fairly sanguine about the demand growth, coupled with the fact that the semiconductor issues that a lot of the OEMs have been put behind us. If commodity prices don't go through the roof, I think we should be okay in terms of the price hikes being passed on. Even though the sectors had a good run, I would still be marginally overweight the autos and auto ancillary sectors even from here.
Okay, all right, marginally overweight on the auto and auto ancillary sector. That's the word coming in. We need to take a short break, but up next, we're going to put the spotlight on Syrma.
Welcome back to Halftime Report on CNBC-TV18. Well, there's a new listing in town, Syrma SGS Technology, and it's made a strong debut on Dalal Street. The stock opened at 260 rupees, and look where it's at right now, 307. That's a 40% move. Vahishta tells us more about this listing. Vahishta, over to you.
Yeah, thanks for that, Sonia. Well, Syrma SGS Technologies, which is engaged in electronics manufacturing services, lists at approximately 18% premium today. The listing price was at 260 rupees per share versus the offer price of 220 rupees per share. The total IPO size was at 840 crores, of which fresh issue was of 766 crores, and the remaining is for the offer for sale. The offer for sale of approximately 34 lakh shares was by Veena Kumari Tandon, which is one of the promoters of the company. Now, the IPO has witnessed good demand on the first 2 days of offering from the retail investors, while the non-institutional investors picked pace on the third day. Now, the capital raised from this IPO is going to be used for plant expansion, for using the working capital requirements and ramping up their R&D facilities. Approximately 500 crores is going to be utilized on capex, which will take approximately 18 to 24 months to come on board. And of this, 2,000 crores is expected to be generated from this new plant capacity expansion, which is coming on board. Now, the company has diversified revenues from various industries such as industrials, consumer, automotive, healthcare, etc. However, further analysis on the financials bit shows that Syrma SGS Technologies revenues, though had jumped in FY22, the margins had softened in the past 2 years. The cash generated from operating activities had also turned negative in FY22. The ROE and the PAT margins as well have witnessed a decline. In FY22. We had Sandeep Tandon from the management on a channel this morning, and they said that they expect FY23 revenues to grow to 1,700 crores and the EBITDA margins could be in the range of 11 to 12% for the ongoing financial year. This brings us to a market cap of approximately 5,100 crores and the market cap to sales to be at approximately 3.03 times. Now down the line, as the new capacity comes on board, the revenues are expected to jump to approximately 4,000 crores, which leads to a market cap to sales of approximately 1.29 sales. Now to conclude, we can see that the IPO has witnessed good traction from the investors and has been subscribed by 33 times. Back to you.
Okay, thanks a lot for that, Vaisha. So that's about the new listing. But moving on, Nelco is another stock. The stock has entered into, or the company has entered into a deal with Intelsat Aviation. The stock is locked in upper circuit today. Rima gives us more details on that. Rima.
Thanks so much for that. Well, with today's big up move, Nelco is now up nearly 80% in the last 1 year. The news is that Intelsat Commercial Aviation has entered into an agreement with Nelco where they will offer in-flight connectivity in India's airspace. Now, Intelsat has ties with various aviation companies, airlines like LATAM, for instance. So now every time, Intelsat's airline companies that they've tied up with fly over India or to India from India, they will have Wi-Fi and they will have broadband connectivity. Now, Nelco itself has been offering aero in-flight connectivity for more than 2 years. The April Crystal note seems to suggest that the revenue contribution for Nelco from in-flight and maritime connectivity improved to 20% last year versus 15% earlier. So they are betting big on this business as a potential revenue driver, and they plan to tie up with more such companies to offer this in-flight connectivity in collaboration with other global partners. Back to you.
Okay, all right, Rima, thanks very much for that. So a lot of stocks buzzing within the broader markets. We'll do one thing. We'll take a short break. On the other side, we'll get you more stocks to try and focus. Lots of news action on the other side.
I'm back. Now, before we talk about the markets, etc., as part of our India at 75 series, I had the opportunity to catch up with India's best brandsmiths, Pidilite's Bharat Puri and Ogilvy's Piyush Pandey. Currently, they're at Pidilite and Piyush Pandey has been at Ogilvy, but back in the day, they've worked together on iconic brands like Asian Paints as well as Cadbury's too. So they've taken us down the memory lane, telling us stories of India. Hear them out. Your favorite Indian holiday destination?
Little beyond Simla, Mashobra and beyond.
Rajasthan.
Favorite Indian musician?
Kishore Kumar by a long distance.
Bhimsen Joshi.
I'm surprised you didn't go with Ila Arun.
And now you would have then had something to write in social media about my nepotism.
Favorite Indian brand which is not yours?
Titan, probably.
Titan? Yours?
If you definitely don't want mine, then it's Haldiram.
Okay. Wow, that's a great brand. Favorite Indian?
Mahatma Gandhi is somebody you start with, and I don't think anybody has still overtaken him.
Sardar Patel.
Your favorite Indian food? I mean, this I'm sure is going to be a longer answer than...
See, this is a very difficult question. Favorite Indian food, it depends on the
Look
time.
at our sizes.
And it depends on the time of the day. It depends on but if you ask me for one single favorite Indian food, I would say a wonderful aloo paratha.
Khuteta ki kachori from Jaipur.
I'm sorry, I'm digressing here because since we speak about food, India's food actually, signifies the kind of diversity that we have, etc.
Wonderful thing is India, it doesn't matter whether you're in Madurai and you're in Shriram Mess, whether you're having these lovely Rawat ka kachoris in Jaipur, or whether you're having Lucknow's Royal Chaat, it doesn't matter. Each of the places, these are the places to be ticked off, and everybody will keep them ready. And the thing is, my trade in 2 of the 3 companies has been a dealer-led trade. Dealers anyway in large parts of the country believe if they don't feed you, they're not, hospitable enough. This was taught to me by an old boss after I said, listen, by the time I reach the 5th or 6th shop, I'm dying. He said, now I'll tell you the trick. The moment the guy says, "Aap kya lenge?" ask for a pan. And start chewing the pan and then say, now I can't have anything else. So these are the tricks you learn along the way.
Most beautiful experience, I was shooting with Mr. Bachchan. Right. With the tribals in Gujarat in Saputara, close to Nasik. And there was a shot of Mr. Bachchan having a piece of, or a bite of the meal that the tribal lady was making. And the shooting guy, Sujit Sarkar, and team have got sandwiches and us all for Mr. Bachchan and me for the lunch. And Mr. Bachchan, after first shot, he said, Piyush, come here. So I went there. I said, what sandwich mat khana? Apan inki, there was a red roti of some wheat, not bajra, but very bajra type, or some wheat. It looked very reddish, and a bamboo ka achar. We ate that stuff. I've never had food like this. So you will discover India in the smallest of places, and each time it's magic. I have a problem when I go out of the country. I don't have a problem in the country.
And I know what you don't like. You don't like sabzis which are called jalfrezi.
I hate them because I went to, when I go to the restaurant, they say, we'll give you veg korma, vegetable jalfrezi, mixed vegetable. मैं यार साले सब्जी का नाम तो बता दे यार. वो भिंडी है कि टिंडा है कि तोरी है. I want to have a sabji with a name.
I must tell you, with this fellow, whenever you're traveling with him, and we were together at the London Olympics, he comes to me and says, partner, and you know, they had this whole hospitality program, we're going to this restaurant for this. He says, partner, ye wala bunk karenge kahan? Just in this little lane here, I found this Nepali fellow who's got a good Indian restaurant, we'll go there.
3 things that you think India can teach the world.
Unity in diversity, first and foremost. How to keep moving ahead. And I think India can really teach the world humility.
You're a Rajasthani, you know that when in 47 degrees they are making the roads, they are still singing songs.
And that brings me to my final question. We're India at 75, India at 100. How do you imagine it to be?
Prosperous, unified, a place where others look up to and say, I wish we were like them.
Century, celebrate, and then tell yourself, take a fresh card and say, I'm betting on 0. I'll score another 1.
Okay, well, it's a conversation I think you can watch 75 times and more, definitely. It's a lovely conversation which Mangalam has had with Bharat Puri as well as Piyush Pandey. You can hear all of that all through the day today on CNBC-TV18. Mangalam, I'm going to toss it over to you. What do you think was probably one of the biggest, conversation highlights for you? 1 and 2, you're watching another stock, so we can get to that after this.
I'll talk about the stock in just a bit, but you know, I graduated in advertising. So for me, Piyush Pandey was this larger-than-life person, etc. And Fevicol, the kind of brands that he's created, Asian Paints, Fevicol and Cadbury's, we remember all these ads. So just to be in that space and them telling us all those stories. I mean, we would have read
you've never heard of.
Stories you've never heard of. How they discovered A.R. Rahman. A.R. Rahman, by the way, as a musician, was discovered by Asian Paints because they were looking for some musician in the south, in the southern part of the country when they were coming out with an ad for Pongal. And they said, okay, there's this small guy who went by the name of Dilip. And they said, you should take music from him. And that guy turned out to be A.R. Rahman.
Oh, wow. And just to be in this space with these legends, right? Yeah. I mean, it's an honor in itself. There's so much to learn just by breathing the same air.
This was the easiest interview I had to do. I just sat and I kept my mouth shut, and my only job was to keep my mouth shut, which is a tough job. Those guys just regaled me with all those stories.
You know, even Bharat Puri, I mean, for that matter, we've interviewed him several times, and he is such an amazing human being. There's so much to learn from him, apart from the fact that he's grown such a big brand over the years. But a great interview, by the way.
Thank
and
you.
I'm sure all of you will watch it several times over the weekend as well. We'll not just on our channel, but also on social, on digital, so do catch the highlights there. But in our special segment, Unusual Movers, Mangalam, you're tracking Mazgaon Dock Shipbuilders. Why is that?
That's correct, because it's an unusual mover today. In today's trading session, it's up about 12% and you know, it's not that it's been moving for a while, etc. It's just in today's trading session, it's up 12%. But this month itself, it's rallied about 27%. A large part of that can be attributed to the kind of results that the company posted as well. This month, it's 27%. And today, the reason why the move is even more unusual is because it comes on the back of huge volumes. 6 times the last 2-week average in terms of volumes have been traded already today, and we still have a couple of hours of trade left. The first quarter numbers were phenomenal, 84% jump in their revenues, the highest ever revenues that the company has done in a quarter, net profit jumping around 134% as well. And for them, the big triggers will play out as we speak, in the next couple of quarters. The first one, they bagged 2 orders from Container Corp for about 2,500 shipping containers. The second one, they've initiated design and development of an indigenous midget submarine. So if that works through, that could give them some more orders. And they've also developed 6 packs hydrogen fuel cell powered EV, which is developed in collaboration with Tata Advanced Systems. So they are doing their futuristic business, while the current business does well for them as well. Volumes and the stock is moving higher at a fresh 52-week high.
Okay, a lot of stocks at fresh 52-week highs. Thanks, Mangalam, for that. That's on Mazgon Docs. We need to take a short break. On the other side, we'll put the focus on an interesting take on the banking sector. Banks reported what was a weak operational performance in terms of operating profits.
Okay, let's talk about the banking space now. Operating profits have been weak in Q1 for banks because of treasury losses and high operating expenses. Abhishek is here to tell us how Q1 panned out for the banking sector. Abhishek.
Well, banking sector reported a weak operational quarter in terms of operating profits, which was marked by the fact that, there were treasury losses and higher operating expenses. However, net NPA ratio of the PSU banks fell to less than 2%, perhaps for the first time in last 7 years or even more. Let's take a look as to how the Q1 FY23 has panned out for the sector. To begin with, the P&L performance, GSEC yields had hardened in Q1 FY23. This had an impact on the treasury portfolio for many of the banks, and operating profits also of the banks declined by about 9% YOY and 10.5% sequentially. For PSU banks, the operating profits fell by almost 17% YOY and more than 15% sequentially. While on the other hand, for private sector banks, the operating profits grew by a marginal 0.5% YOY and fell by 5.3% quarter on quarter. The banking sector reported net profits of 44,145 crores, which was up more than 37% YOY, but it declined by 9.5% sequentially. So for PSU banks, the profit stood at 16,064 crores, which was up nearly 10% YOY, but it declined by 12.5% sequentially. While on the other hand, private banks reported a total profit of 28,082 crores, up nearly 60% YOY, but it declined by 7.6% sequentially. The total restructured book of the sector now improved to 1.98% of the loans versus nearly 2.2% of the loans in the previous quarter. The lowest share of restructured book is of Kotak Bank, Axis Bank, CSB Bank, SDFC Bank, SBI as well as ICICI Bank. Now, mixed performance was seen on slippages front, was witnessed in Q1 FY23, given the fact that slippages increased by 7.3% quarter on quarter for the banking sector. Annualized slippage ratio, however, increased by only 10 basis point quarter on quarter to 2.32% when compared to 2.22% in the previous quarter. It was a mixed performance with respect to slippages. PSU banks saw slippages decline by 4.5% quarter on quarter, while on the other hand, in absolute value, we saw slippages increase by nearly 28% quarter on quarter for the private sector banks. The good news on asset quality is that PSU banks have now reported the lowest net NPA ratio in last 27 quarters or 7 years. It has now fallen to below 2% level. So gross NPA ratio of the entire banking sector declined to now less than 6%, that is about 5.94% when compared to 6.18% in the previous quarter. And net NPA ratio of the banking sector was around 1.6% when compared to 1.7% in the previous quarter. Loan growth momentum in Q1 FY23 is perhaps one of the best that you are seeing in last 4-5 years. So with rates being increased, net interest margin is either here to stay or see an improvement going ahead. So banks will see some of the treasury losses being reversed in Q2 as yields have improved. So credit cost has continued its declining trend and may remain on the lower side over the next 1 or 2 years. So capex-based demand on corporate side is still missing from the banking sector. It will take some time to come, as much of the corporate demand this time around has come from working capital. Retail loan growth is doing good, pretty good in fact, in terms of both growth and aiding the underlying profitability of the banking sector.
Okay, all right, Abhishek, thanks very much for that. Well, on that note, it's also a wrap from all of us on Halftime Report. Business Lunch up next.